Anuj, hi, good morning. Great to have you on the show. Anuj, we all
Hi.
know what's happening with crude oil prices. Internationally, rubber prices as well have been seeing a jump. Tell me firstly, what's happening to your raw material basket cost increase from first quarter up until now?
Yeah, so good morning and thank you for having me on the show. As far as the input material prices are concerned, if you take the quarter one and even what we are seeing in quarter two, they have been largely range bound. There are some commodities where we saw a downward trend continuing from the quarter four of last year. In some commodities, they have been more flattish. Yes, there are indications of the crude oil, but as of now, that has not reflected in our input material costs. But we are watching it very carefully, and we would be kind of keeping those things in mind. But as of now, as I said, uh, all the input material costs, whether it's natural rubber or others, are all range bound.
Does it stand to then impact your EBITDA, gross margins in any which way, or would you say they've actually improved from the first quarter levels?
No, we will be seeing, as of now, quarter one, we saw that our EBITDA levels had improved as compared to the previous quarter. And we expect that the similar trend to continue going forward. There would be, in case there are any major changes, which we do not anticipate as of now, we would have to again take pricing action. When it comes to the OE, most of the OEs, especially in the passenger car segment, we have indexation with the raw material. So that gets taken care of to the large extent. In the replacement market, what we are seeing as of now, we are approaching the festive season. The demand is looking great, especially in the both in the passenger car as well as in the commercial vehicles. So once the demand is there, I think so the price levels definitely sustain.
Mr. Kathuria, hi, morning. And you've also been gaining market share in select categories. How are some of the new launches in the PV segment and the new products in various categories? How is that shaping up? And if you can also highlight your foray into the high value EV segment, will that help raise your overall average realizations?
Recently we had announced the passenger car capacity expansion, which we had undertaken in our Banmore plant. That is progressing quite well. With that, we are producing the higher segment, higher rim size tires. The demand for those tires, the premium segment tires, is increasing, especially with the overall passenger vehicle segment moving to more of the SUVs. So the demand for the higher segment tires, especially in the 16-inch and above category, is looking quite robust. Those tires are definitely more profitable, being in the premium segment. So we are trying our making the efforts to move into that segment in a big way. That will definitely help. We had also launched in the quarter four of the last financial year, the Levitas range of tires, which are for the luxury segment, the Levitas Ultra. That also has been very well received in the market. There again, we expect the volumes should pick up going forward, considering the overall population of these luxury cars increasing by the day. So we expect the premiumization, as we call it, to pick up even better in the next few quarters.
Players in your industry have also cut prices of select categories. Do you plan to do the same?
As I mentioned that, this is more of a market tactical play. So this is, I don't read too much into it as of now. So depending on which geography and which region we are talking about, each of the players have their own way forward. We have also been able to launch a few premium segments in the commercial vehicle category. Our extra fuel efficient or the energy saver tires, those have been launched and now available pan India, both for OEMs as well as in the replacement market. They have been received very well. In fact, some of the responses that we have been receiving of late from the fleet operators is very encouraging. The kind of fuel savings that they are able to get out of these tires is really encouraging, and we expect that these would establish themselves as a winner product in the market. Talking about the EV tires, as you rightly said, we are kind of having a full range. We are market ready. In fact, in some of the segments, especially in the intra-bus segment, intra-city bus segment, where we have in the places like Delhi or even other cities like Bangalore, most of the buses that are there, the EV buses, do run on our tires. They have been very well received. For the passenger car segment, also we have launched the tires which are made, designed and produced specifically for the EV range of vehicles. Two-wheelers, as we know, is a segment where the EV penetration is the highest. There again, we are working very closely with many of the OEMs, and also our tires are being made available in the replacement market.
The other thing I also wanted to understand, was the expectation of, the replacement demand, and especially ahead of the festive season.
Yeah, so as I mentioned, the replacement demand is quite robust as of now, both in the passenger car segment and even in the commercial vehicle. Though there is a shade, sluggishness in the TBR and the TBB, but that also is not. September generally is a good month, and the demand is again showing up robust. July and August being months where the monsoon is at its peak, definitely the demand is a little sluggish, but we see it coming back once the festive season kicks in.
So just a word on your net debt, because that, as we understand, has reduced by around 25%, right, since FY19. How is it that we should see your debt move in the future quarters and years to come?
So we are, our efforts are on to further deleverage, and we are working on that. There are specific plans, and we would expect that, in the next couple of years, say by FY26, we should see the long-term debt reduced by another 25 to 30%.
How much time? Would you have a timeline target for this debt reduction that you just spoke about?
As I mentioned, we are looking for this debt reduction by FY26.
That one, my bad. FY26. Great. Great to then have you on the show, Mr. Kathuria. Thanks so much for taking the time out.
Thank you very much.